Good morning. Below are the daily news topics rewritten as a listener-friendly script, each summarized in 3 to 4 clear lines in English. Topic 1. AI-driven optimism lifting chip and AI-related stocks. AI optimism is boosting semiconductor and AI-related stocks. Memory names like Micron have surged. Micron's share price has roughly doubled since late March, and semiconductor indices and memory ETFs have climbed sharply as analysts voice a possible memory supercycle and sustained demand for SK Hynix, Samsung, and related infrastructure and software. OpenAI is forming a new corporate unit focused on enterprise deployment, committing more than $4 billion in initial capital, acquiring consulting firm Tomorrow to add roughly 150 AI engineers and deployment specialists, and partnering with TPG, Advent, Bain, and Brookfield to scale enterprise rollouts. AI chipmaker Cerebras raised its IPO price range to 150 to 160 per share, aiming to raise up to about $4.8 billion and implying a fully diluted valuation near $48.8 billion, with Nasdaq eyeing a mid-May listing. Meanwhile, Big Tech is raising capital for AI build-out. Alphabet is even considering a yen-denominated bond after recent roughly $17 billion in euro and Canadian dollar deals, and has lifted its capex outlook into the roughly $18 to $19 billion range. At the same time, Google is using AI defensively, detecting and blocking criminal attempts to use LLMs to find zero-day vulnerabilities, highlighting both rapid commercial expansion and rising cyber risk. Topic 2. Oil spikes as U.S.-Iran tensions re-escalate, raising geopolitical and market risk. Renewed U.S.-Iran tensions and stalled talks have pushed Brent toward about 103 to 105 and WTI near 99 to 100s, with incidents around the Strait of Hormuz and reported cases of ships sailing with trackers off, raising supply concern premiums. Saudi Aramco's CEO warned of roughly 1 billion barrels of supply disruption over the past 2 months. The faltering peace process and higher oil risk have driven risk-off flows and higher treasury yields. 10-year yields around 4.39% and short rates also up, lifting market volatility and denting equity sentiment. Leaders' rhetoric and upcoming diplomacy are key variables. Netanyahu and Trump have hardened language. Xi and Trump's Beijing meeting this week could affect China's leverage on Iran, and India's Modi is urging fuel conservation and other domestic measures to blunt the shock. Until negotiations show progress, upside risk to oil and broader market stress likely persists. Topic 3. Rising fuel costs squeeze both gas station owners and low-income households. Fuel hitting the 100 per barrel range has pushed U.S. now gasoline averages to roughly $4.50, with some regions seeing prices near $6, squeezing both motorists and independent fuel retailers. Many gas stations are small, independent operators facing higher wholesale costs, credit card fees, transport and labor. Retail margins can be razor-thin. Wholesale to retail spreads are roughly 22 cents per gallon versus a 5-year average total margin near 3.83, and stations carrying expensive inventory see delayed price adjustments, prompting some to consider exiting fuel sales for services like maintenance. Low-income households are most exposed. Bank of America data show fuel spending share rose from 3.9% to 4.2% for low-income households. Overall, 2.8%, 3.1%. About 10% of low-income households now spend more than 10% of income on fuel, and limited wage gains mean poorer households rely on credit, BNPL, or savings buffers, helped in part by larger tax refunds. To cope, higher fuel costs also ripple through dining and retail demand. Topic 4. Markets, big deals, and policy outlook shaped by geopolitics and monetary expectations. Private equity and capital markets remained active. Blackstone agreed to buy Greek e-commerce platform Scrouts from CVC for about €635 including debt, returning roughly double CVC's initial investment, while Scrouts' founder retains a stake and the CEO stays on. Wise plans to maintain its London secondary listing, but move it